following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 23rd, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great afternoon. Let's make sure we do everything we can to have an extraordinary day. The easiest way to do that is to always remember that life happens for us, not to us. That's right, that one little 2x4 shift, it'll make all the difference in the world because it means you can find the gift in every set of circumstance that life is going to throw at you. And that's a beautiful thing. We're going to go take a look at the circumstances of the markets. Let's go take a look at what the bulls and the bears are throwing out to you and I. We'll go digest it. We'll go figure out what the message is that they are sending to you and I. I'm absolutely grateful for your presence here, as always, and I'm here to serve you. So feel free to pick up that phone, dial on at 877-927-6648, internationally 727-445-1044. This is terrific Thursday. It is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading down 94 points, trading out at 17,757. S&P down 9.5, trading at 2104.78. I will make this prediction, and that is if we see the S&P close above 2104.75, and we're trading at 2104.81. And if the market is up tomorrow, I will tell you that the next bottom is in. How's that? Well, now, if it closes below that, then that means something else. So we'll go take a look at the message of the markets. We got the NASDAQ composite trading down 14 points, trading at 51.57. Russell's off 11 points at 12.47. DAX closed down 9 points. FTSE down 12. No big deal out there. Gold's up $2, trading at 10.93. Silver is flat, trading at 14.72. Light sweet crude is up, looks like 21 cents, if I still have the right contract up. I believe I do. Trading at 50.36. We've got Valiant Pharmaceuticals gapping up this morning or this afternoon, or certainly this morning, still trading up this afternoon, up about $11.75. Intercept Pharmaceuticals up $10. Adeptus Health, something like that. That's up $11. SanDisk is up 9. F5 Networks up 9. To the downside, DST System Inc. That's up about $18.30, $18.30, down about 14%. Alliance Data Systems off $15, 5%. Google's off about a little over, almost 2%, down about $12. All right, so where do we begin? Let's go take a look and begin here at what's going on intraday time period. Well, first, let's look at the opening range. What do we know about the opening range? Opening range, that's that time period between, I suggest, especially if you're an intraday trader, I most certainly suggest that you mark the high and low between 9:30 a.m. and 10 a.m. Doesn't matter. It doesn't have to be the 9:30 session nor the 10:30. This happens to be a 5-minute chart. It doesn't matter to me which time frame chart. You can be using a 30-minute candle and just simply mark the top and the bottom of that. And that is your opening range. Oftentimes, you'll see price just really kind of trade inside that. When you get a break to either side of this, then you could really have a breakout going for the day. What took place here? Look, if we take a look at 9:30, just to be specific and exact on this 5-minute chart, the actual high during that 5-minute session was at 21.1050. That was the top of the opening range. If you take a look at any time period between 9:30 and 10, happened to be the session between 9:50 and 10 a.m., the low of 2104.25. And what we saw take place out here, we saw price bounce off of that bottom of that range. We saw price move up and almost test the 21.1050. It actually got up to 21.10 and a quarter, and then back on down. Now, I've also marked the bottom of my screen here with volume, just so you can get a perspective as to, from a volume standpoint, is there any kind of conviction one way or the other as either of those swing points are being tested. In this case here, price was moving up with volume, about 17,000 contracts. There were 34,000 contracts up at the top of that opening range bar. So certainly not enough volume, never broke above it. Really not surprising to see that that acted as resistance. Price moved down, wasn't really with any kind of conviction until it actually broke through 2104.25. There was 20,500 contracts. This is on a 5-minute candle that we're looking at here versus the 18,700. So we've seen a break of that. Now let's move from the 5-minute, right? And you've seen some momentum to the downside. Was that the bottom that was put in? I don't know the answer to that question. What you and I can do is go start to use a set of tools to help us identify where price is likely headed to. Now let's go take a look at what's going on a little bit. Let's jump from a 5-minute chart, for goodness sakes, and let's go, because we're going to go from 5-minute to weekly charts out here in a bit, and let's go jump over and take a look. And we're still on the S&P futures contract. But let's go take a look at the 120-minute time frame. So now we're really stepping it up a notch out here. Now, here's what we know about the 120-minute time frame. Number one, Stevie and his clients subscribers went ahead and used the 120-minute time frame pattern to exit our long position. Remember, we went long. We were calling the bottom, which took place here on July the 7th. All right, had a nice move to the upside. We went ahead and exited those long positions. Let's not forget the type of market that we're in here, right? This has been really a trader's paradise type market versus any market that it's actually been a very quiet market. It may seem like it's been anything but quiet, but the reality is if you start taking a look at the trading range that we've been in since the beginning of the year, it's been relatively quiet per se. But look, here's what we know. One of the things that took place on this 120-minute time frame chart, which you and I looked at yesterday, was this specific candle right here took place between 2 and 4 o'clock in the afternoon, and that was on July 20th. That's after the market had made, the ES mini, I should say, had made a 1 to 2 A to B equals CD to the upside. Oftentimes, if you've got Tom's book, The Art of Timing the Trade, which you should have that book, right? It was the first technical book that I read. And I can't tell you what page it's on, but if you do read the book, you will say inside there that when you make a 1 to 2 A to B equals CD, oftentimes you will do something else. Now, that something else can be a beeline in the opposite direction. It could be a move sideways. It could be an A to, whatever it might be. And in this case here, that pattern was completed with that little key reversal session. So far, that's up in the high. That's important. And that high, by the way, is 21.26 and a quarter out here. Now, on the move down, let's just add a couple of things for us to take a look at. Well, we know here's another key reversal type session. This took place July 22nd yesterday. Nice big key reversal day. I'd have to see if there was, I don't know if it was really a key reversal, more of an outside day, because the market wasn't really in extended condition. Hey, doesn't really matter. It was a nice big bullish engulfing candle. It was one for you and I to take, to pay attention to. And price simply moved up off of those lows, and that was yesterday between 8 and 10 o'clock in the morning. Now, what we can see is the bottom of that candle session is 21.02 and a quarter, where we broke through that level. And if we take a look at what pattern may be in play right now, it may be the A to B equals CD to the downside, right? Now, take a look at this right here. This is a huge trend, right? Gartley, H.M. Gartley, bless his heart, the book that he wrote that was at that stage when it was released, you could have bought 3 Ford trucks at that stage. That's how valuable this little Gartley pattern is. And what he suggested, most certainly, is that the trends that you've missed out on, that the best pattern to be able to get back in on that trend is what he referred to as that A to B equals CD down to to whichever direction. In this case here, we've got a nice big trend from the downside to the upside. We're now seeing our first A to B equals CD to the downside in this pattern here. And those were the type of patterns that he wanted you to go ahead and buy when they complete. Now, the good news is that since his time period, many others have added input with regard to the market. Stevie Boy here has gone ahead and melded a number of different patterns together, because I've taken a look at the great works of others and then figured out what it was that they didn't see. Because really, life is all about being able to see what others don't out there, right? Isn't that, if whatever business it is that you're working in, whatever it is that you're doing, isn't that really the secret out here? I believe that's one of the secrets. Now, if we take a look at what's moving down right now, If we take a look at it, we can see that our price objective here is 2,089.75. We're not there yet. And if we take a look at, just simply look at the volume pattern, okay, the volume when that swing point was broken, the volume on that was 290,000 contracts, and it was broken with conviction, with volume, 344,000 contracts. That tells you and I that there's a really good chance that price is going to get down to at least 2,089.75. Now, look, we're not going to get too caught up into whether it hits the tick exact or not. In fact, what I would tell you, if there's some real conviction behind this move, is that we ought to see an expansion of that A to B equals CD to the downside. We ought to see 2082, maybe 2074 get hit. And if we take a look at just simple retracements, right? Now, this is where Larry Pesavento took the great work of H.M. Gartley and put his own great work to it, right? Because he was best buddies with Leonardo Fibonacci. He goes back a ways, right? It goes back into the 1500s, I believe. So, you want to have that kind of blood to be able to be alive for that long out here. And what he takes a look at, what you and I take a look at, is some kind of Fibonacci retracement coming together at that same point in time. Yeah, Larry says he went to school with them, and that's a beautiful thing. Now, our first retracement level on this A to B equals CD pattern would take you to 2091. Right above the 2089.75. Hey, look, if that is the end of the move to the downside, and we don't have any kind of signal yet. But, of course, I came on, I gave you a price point inside the S&P 500. So if that holds today and we see the market up tomorrow, Stevie says that the bottom, this next bottom, is in on the marketplace. If that doesn't happen, we've got alternatives to take a look at. And likewise, one of those alternatives would be the market moving down to sweet old 0.618. That retracement level is 2,069. There you'd have almost a 1 to 2 A to B equals CD to the downside, just the opposite of what we had to the upside. So that's going to be something that you and I are going to want to take a look at. There's other elements for us to look at. Let's go take a look at our horizontal trading ranges out here. Now, these horizontal lines of support and or resistance are really key because I take a look at the last 1,600 bars of data where there was really active trading. So between 4 o'clock in the morning and 5:15 in the evening is really what I'm taking a look at. And I'm trying to identify the price area where we've seen the largest number of opens and or closes out here. That price area, by the way, happens to be the price level of 2,093. There have been 63 opens and closes at that level. That's a significant level of support. That is a 0.382 Gartley buy pattern. We're not there just yet. We don't have any kind of reversals, but it is something for us to watch. If we see the market move below that level, then that says there is absolutely no reason for price to not get down to the 2,071. Well, at least not until we would see the bulls rush in. Now, there's one other element that we can add to this, and we'll just simply have to do it when we get back from this break, and that would be just take a look at our TAS market profiles. Now, how's that for taking one chart and just simply taking the work of all the great artists here at TFNN, melding them all together to give you an idea of where the markets are headed? Mwah. Hats off to all of them. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 108, S&P's off 11, composites down 15 points. Now, when we were just taking a look at that 120-minute time frame chart, I'll flip back to it here real quickly. The last piece of information here that we can take a look at for levels of horizontal support and or resistance, really it takes us back and take a look at the daily and weekly market profiles. And that's really the green line that I've got on here on my screen. We can see that price is below the top of the weekly profile for the S&P, the ES mini, I should say. That level was tested when we saw that little key reversal or outside bar yesterday, and that's really the level that was broken through earlier today. So that says, hey, more likely than not, we're going to see one of those A to B equals CD patterns that we looked at. But just before this break, go ahead and complete. Now, whether that takes place before the 4 o'clock time frame or not, that much I don't know out there. And so, you know, patterns can complete overnight. It's why you want to actually follow the futures contracts. But patterns can complete overnight, then turn and then move higher, lower, what have you. But it's really these patterns that you and I are taking a look at. By the way, 2085.50, that happens to be the bottom of the daily market profile out there. So that could also be a level of support. Now, what I want to do is I'm going to switch over. I did this once before for each of you. Obviously, we see this trend out here, and I am still calling for another bottom to form in the marketplace to move us higher through this unfavorable seasonal cycle, right? We're in sell in May, as the song goes or the rhyme goes out there, but the reality is it's a 6-month cycle. And the market does not typically top until July anyways. Now, interestingly, we had the NASDAQ composite up at highs out there, right? So, we've got one of the indices that certainly has topped towards the middle end of July out here. But oftentimes it can also go into August. And that's what I believe we have taking place right now. Let's switch over. I shared this with you once before. I'm going to go ahead and do it again. And what we're going to take a look at, like many people, like so many people have pointed out, look what the heck is going on in the Dow transports. And they're absolutely right, because now this is a weekly chart that we're taking a look at. The upper portion of my screen is the Dow transports. The bottom portion of my screen is the Dow out here. Now, when you actually take a look at the weekly chart for the transports, it really doesn't look that bad, does it? And what we know about the transports is they've come down into the lows here from October. There hasn't been, from a weekly standpoint, any kind of real reversal, unless you want to call the gap up that took place from last Friday to this Monday, that, and which you could, but price is trading inside it right now. But we have seen, if I put this on a daily chart, we have seen a very steady decline. Now, projected topping time frames between a divergence between when the transports make their high and the Dow make their high typically fall into one of four patterns: 35-week difference, 40-week difference, 43-week difference, or 47-week time frame difference. That's right. The transports, when there's a divergence, out here, typically the Dow itself doesn't follow along with it because there's a divergence, right? And it doesn't top out for 35, 40, 43, 47 weeks out here. How do I know that? Because I've done the work. Because you should do the work as well. Because you should always look at things differently than the way that others are. That is one of the sole keys in life out here. So let's go take a look. Here's one of the things that we do know about the Dow. If we take a look at the Dow off of what I consider to be the last real major significant bottom, it'd be in October of 2011. Of course, we know that there was also another real significant bottom, October of 2014. Folks, if you just simply take a trend line off of those two lows, you're also going to go ahead and get the November 2012 low in there. And you can see that the trend, which is your friend, is still in place. So we are still in a bull market no matter what. We are still in a bull market. So look for that Gartley buy on that intraday chart, that 120-minute time frame. We'll see how that works out. We'll see what that turns into. But let's go back further now, because I don't want to sell you on anything. This is not about selling you on anything. This is allowing the market to influence you. This is not Stevie influencing you. This is about the market influencing you. Let's go back and take a look at the last time we saw any kind of significant divergence between the transports falling apart. And my goodness, they could have been screaming in the streets out there, I would only imagine, back in 1999. In 1999, the end of 99, the beginning of 2000, when, I take that back. It was in May of 1999 is when the transports topped. And you can imagine they were screaming from the top of their lungs out there as the Dow continued to motor on higher and the transports continued to motor on lower. How long did it take for the actual Dow to top? It was 35 weeks later. And if you take a look at its trend line out here, we're going to have to spend some time during the next break out here just to complete this, but I don't think you'll mind. If you take a look at the lows back in October, how could it form a low in October of 1998, and you run the trend line here? You see, that wasn't really broken back until February of 2000. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 104, S&P is down 10. We'll go back to the transports and the Dow correlation shortly. First, we're going to go up to Chicago to Robert. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hey, Steve. Thanks for taking my call.
My pleasure. So lunchtime out there, and you're having lunch with us. We appreciate that very much, and you want to take a look at Citigroup. So tell us what you're doing, how I can help you.
Yeah, and you had mentioned it at the very end of your show yesterday, so I was listening to your show yesterday. You mentioned BAC, and I think you might have mentioned Citi. I'm long Citi, and I have a longer-term view on Citi, outwards towards October and January, and that's kind of, I'm long now, and my view is longer-term towards October and next January. I'd like to stay long. How can you keep me in the trade? Can you keep me in it?
Well, you're going to have to count on the buyers and sellers to actually keep you in the trade, but I'm not going to get you to exit the trade. So let's take a look at the pattern that could be unfolding here for Citigroup. Now, folks, if you want to take a look at a chart just to understand how much potential there might be in a trade like Citigroup out here, just take a look at this monthly chart. You'll see we're priced at 60.09, and this thing is priced at $569. Is that because of some splits, maybe reverse splits or something going back to December of 2006? It's just there's a lot of room for opportunity. You could only hope that this thing makes a 100% move in our lifetime out here, because then you'll be Daddy Warbucks. But let's take a look at what it's doing here on a daily time frame. And I pointed it out because I was using that wonderful scanner that John Logan had put together. I was looking for actual equities that during this decline here were above all of their market profile highs. Weekly, daily, 240, and 60 are the four different time frames that he uses, Robert. And Citigroup, and Bank of America showed up on that list. I haven't looked at it this afternoon to take note, but and it's held up very well today. Yesterday, what I noticed was, it had a nice volume day. It did 30 million shares. It has taken out resistance. In my opinion, that would have been back at about the high on December 18th, right around the 56.95 level. That had 21 million shares. You had a nice gap up with 41 million shares through that level on July 15th. So this has a number of different. You would mention dates that you're going to stay in. So you're more date sensitive than you are price sensitive. Is that what I'm hearing?
No. I just wanted to give you a sense of, I'm not day trading this. I'm not swing trading this. I'm more price sensitive. Absolutely.
Okay. If we're going to take a look at the ultimate outcome for you here, maybe the ultimate A to B equals CD price expansion pattern on the city, it's in the 75 to 84 level. So, I would certainly, that's looking at a longer term weekly chart pattern out here. And that's where the B point from January in 2014 had volume of 127 million shares, and you're up above it with 119 from last week, and this week you're at 87. You're probably going to be light volume out here. So the weekly chart hasn't really given you the best of confirmations. It's not bad, but it hasn't given you the best of confirmations. But I would say that $75 area becomes a target if I look at the weekly. If as far as where your stop, you ought to have a stop. I don't know where yours is at, but like with any gap that's out there, price can always come back and fill that gap. And in the case of Citigroup, your real level of support on this ought to be the top of the July 15th area, which is 56.79. Now, if you had a stop below that, are you still in a profitable trade position? And whether you are or you aren't, that ought to hold as support. So we'll just leave it like that. So it looks strong. I see no reversal. Even on a if I just take a look at the daily A to B equals CD pattern for you, just to take a look at what that price projection is. Well, I think I have to move something. Start it. Give me a moment. I had something in the way there, so I'm going to start over here. And what I'm using for my A point for our price projection is a January 16th low. I'm going to use this little high out here from June 23rd to pull back into the July 7th, July 8th area. And that gives us 63.81. I don't recall what the weekly I came up with, but 63.81 ought to be a target. I would probably exit the trade if it was pulling back with volume and it closed below the July 15th low, 55.95, something like that. That's probably the best info that I can give to you. But ask me another question. I'll try to answer it.
No, actually, the reason I gave you my view, and I mentioned October and January, is that you would give me a stop like you mentioned, 56.79 or 55.95. That's my longer term view. That's fine. I can work with both of those. But I think actually, if you see 56.79 or 55.95, you might be buying more.
Yeah, absolutely. You got to think that there's. I don't know if there could be a message more telegraphed from the Fed that they're going to start raising interest rates. You know, how frequent, how often, how much, no matter what, it's good for the market and it's good for banks out here. And we're seeing that in the way that we see the XLF trade, and we're seeing that certainly in the way that Citi, I haven't looked at Bank of America today. I know they had a change with regard to the CEO, the fall guy, I'm sure, and for whatever was going on. And actually that has not pulled back too badly. Yesterday was breaking out above a, an area of resistance with some conviction. There was 110 million shares taking out 57 million shares. It was pretty good. And it's just come back to test that level today. So yeah, I think that you would want to go study the financials, because if the entire sector is behaving like you're looking at for Bank of America and Citi, that's a very big positive for you. All right.
Super. Thanks very much, Steve.
You bet, Robert. Have a great day. That was Robert in Chicago. Now, let's do this. Let's go back and go back to our Dow Industrial and our transports. Because, look, the folks who have pointed out the divergence between the transports and the Dow, they're dead on right. But here's the deal. Just knowing there's a divergence isn't going to help anybody. You've got to understand the patterns, right? You and I are nothing more than just simply pattern recognition experts, specialists, masters, right? When we take a look at A to B equals CD patterns or anything else out there, it's all about understanding that the probability is that those patterns are going to complete over and over and over and over again out here. Now, the same holds true when we're looking at weekly charts here for the transports versus the Dow. So let's take a look at we took a look at this. Oh, by the way, we took a look at that trend line. I want to take you back to here's the very bullish side of the market, because if we take a look at the top back in 1994, this is the transports topped out in February of 1994, and for 43 weeks they moved to the downside in total divergence of what the Dow was doing. The Dow actually in the 1993-1994 timeframe looks more like what's going on today as it did here. And we saw the transport just simply. Now, here's the deal. When there's that divergent, okay, and here's the trend line coming off of its most important swing point, 92. So you got a nice little 2-year trend line out there that, by the way, that was never broken. During that entire time period where the transports were going ahead and making lows out here, it was when the transports started taking off to the upside back in December of 1994 that then all of a sudden the Dow really got its energy and moved higher. So the same type of pattern could go on here, right? If we go to week 43 or whatever, I gave you 4 different weekly periods of other time environments when we saw divergences, significant divergences between the transports and the Dow. In this case here, the totally significant bullish, whether you like it or not, let's just look at patterns, right? Let's just simply look at patterns, because if you are going to be a believer that the transports are giving you a huge signal, which I'm on board with you, by the way, let's look at what they really do. Let's look at the real signal. In this case here, if the Dow does not break its trend line, the one that we just looked at, we don't have this is the 94 one that we're looking at, but just so you can see how that pattern, and the transports make a bottom, a significant bottom, and start trading higher, you can forget about the market making any kind of major move to the downside. It's going to make a major move to the upside. But that's what has to happen out here, just as it did back in the 94 time period. If we go ahead and we take a look, and let's come back here, back in the time period of 1989. In 1989, back around August, right around August 28, 1989, give or take, I think that was the beginning of the week, the transports had topped out. The Dow moved sideways to higher for 47 more weeks. During that time period in the transports, and let's face it, the transports here, just to give you how bad it was back then compared to now, back during the time period of October of 1989, you saw the transports gap down in a big way out here. Gap down in a big way. It took them a year. Well, how long did it take? That gap did not get filled until 1991. That's how long that gap stayed around. And so it took 47 weeks before the Dow itself went ahead and started to really move lower with any kind of significance. And it really wasn't that much in the way of significance out here. And as soon as the transports started to find their bottom, what did the Dow do as well? That continued to find its next bottom and move higher. That takes you back into the 1989 time frame. We've got one more that we can show you here. I wish I had more that I could show you, but I'm going to show you one more. And let's just go back to 1972. And the whole purpose of this is to give you the gist of what really takes place when you see a divergence between the transports and the Dow. And maybe you'll just call this Stevie theory, right? You got Dow theory. We'll just call it this TFNN theory or Stevie theory or anything you want. But let's just call it what it really is. And this is understanding the pattern between the Dow and the transports out here. And the transports themselves topped in April of 1972. And the Dow topped 40 weeks later, went on to make a higher high. And it really wasn't until we saw that trend line, right? You saw a significant trend line inside the Dow. This one took you from 1971 up into the trend line was off of the October. Hey, there's that October. Do you think that the market makes lows in October? Or do you think I just make this stuff up? I don't make this stuff up. This is just understanding the patterns inside. It does. Is it really a big surprise that it made a bottom last October? And the one before that, and the one before that, and most Octobers out there? No, no, no. Of course it's not. It's really what the market does, what the Dow does at least. So 40 weeks. Now let's just simply, so you can see those patterns, you can see those trend lines. Now let's go ahead and fast forward all the way to where we're at today. And we can see we've got that nice trend line. Heck, this is longer than a 2-year trend line. This one's coming off of the 2011 area. So we can see a nice trend line has been broken. The very first time period, we're really close to it, right, would be 35 weeks. That would actually be next week. So if you take a look at the same types of patterns, right, you see that the transport's been moving lower, but not the Dow out here. The top in the Dow, the high in the Dow was what, the week of November 24th, 2014. Is that correct? I actually have to go back and take a look at that. I haven't done this. I haven't come back to this spread. Well, really, it's 43 weeks, 35 weeks from the time period that the transport stopped. That's really how you take a look at it. But I don't know. Could it be next week? Hey, anything is possible. But most likely it's not. But here's the real key. Now that you know this pattern, now look, selling the top tick, being real close to the top, that's fun. I've only done it once, and that was actually I've done it twice, the March lows, but I didn't buy the exact bottom tick. I was 100% long on March 6th, and I was able to sell the top ones within like about 2 pennies. And I remember somebody got really excited about that, and I just said, look, it was just absolute luck, nothing more than that. We knew that the top was coming in. We sold it then, and we just simply got lucky. And you want to be lucky, right? In this case here, all you and I really have to do is know 2 things. One, does this trend line get broken? Because if it doesn't get broken, and the second thing that we need to know is, do the transports find some type of bottom? Because if they do find some type of bottom, and right now they've been testing this October lows, the October low out here, at least the top of it, if it does find a bottom, then forget about me saying that the market's going to go higher through August. It's going to go higher even beyond that, much to the chagrin of many folks out there. However, you and I, we should be aware that we're getting towards 35 weeks out, 40 weeks out, 43 weeks out. By the way, 40 weeks out is the end of August out there. And you were wondering why Stevie was calling for a market top towards the middle end of August out here. Voila. There it is. As Gus would say in my big fat Greek, what would we do? He would spray some Windex, right? He would spray some Windex on the screen out there and say, there you go. So I will just simply say, there you go. And that's my take, my outlook with regard to what's going on. And that then takes us back to knowing this, takes us back to taking a look at what may be setting up, which is the next great Bartley, but the next great Gartley buy pattern when we take a look at the ES Mini. And we'll just have to wait. And I also gave you a clue too, right? What was the number? I think it was 2104.75, not to be exact. But we've already tested that in the S&P 500, and if we close above that, we see the market move higher tomorrow. You will at least have heard it here first at TFN.com. If we take a look at the markets right now, the Dow's off 96, S&P is down 9, Composites off 13, gold has gone basically flat here. It's trading at 1091. Oh, by the way, you got that Euro-Japanese yen out here. It's not signaling any kind of market that wants to move lower. She's moving higher. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Now, I want to go back out to just cover, Robert called from Chicago. He's in the Citicorp out there, Citigroup. I want to make sure, because we touched on the XLF, and it's really important. A wonderful guy taught me the lesson that, look, at basically when you're in an individual stock, right, you want to get the market right. You want to get the sector right, and then the individual stock out here. In fact, that guy is coming up next. That's the one and only David White out here. So we want to make sure that with regard to the individual stock, what's going. The market. I think the market conditions are what they are. Some of us here have bearish outlook. Some of us have bullish outlook. I just simply go ahead and show you the different charts and patterns that I've got and say consider this. With regard to what's going on inside the sector, that's why I've switched over to the XLF. And the XLF has had a real nice move off of those July 7th lows out here. But it's also gotten stretched. And if the sector is going to start moving lower for any reason, to expect the individual stocks within that sector to just blow it off is that you're asking a lot. Now, if we take a look at what the XLF has done from the highs here of June 18th down to lows on July 8th, they've just simply made a 1.272 expansion. Now, the reason to show that is really two different reasons. One, sometimes when you make an expansion of 1.272, that's the extent of the move. That doesn't mean that you have to pull back and crash or anything like that. It just means that you could start to move sideways out here. You can also go up to the 1.618 expansion, and if we see any move above today's high, the answer is that's what it's going to do. Because today, and that, by the way, that price point is 2605 inside the XLF. Because today's candle session is a key reversal. Because we have that expansion, in order to have a key reversal session, you've got to have three things. Those three things being you need to have today's candle exceed both the high and low of yesterday. Well, the high of yesterday inside the XLF was 2561. The high today, 2562. We've exceeded it by a penny. That's all you need to do. You can see visually on my screen that the low has also been exceeded. That's the first thing. The second thing is you have to come from an extended condition. See, the difference between a key reversal and an outside day, a key reversal, you've got to come from a extended pattern of some sort. That's where a lot of people go wrong. Many people go wrong just in simply reading the candlesticks out there. If you'd really like to understand that, I've got wonderful workshops that'll get you from A to Z faster than you can say A to Z out there. And you can access those. You can send me an email. In fact, I'm just updating. I've never used LinkedIn. I'm just updating my LinkedIn stuff. If you're a listener out there and you like the information I send to you, I'd like to just simply add you as a contact. Just, search my name, Steve Rhodes. You'll see my picture come up. It's me on a sailboat with the ocean behind me. You'll be able to see me. Send me a request so that we can connect, and that way you've got an extra connection. I've got an extra connection. So if you're a LinkedIn user, do that. In any event, let me get back to this here. And the third thing is you've got to at least close in the opposite direction. So just like teaching you about candlesticks and or key reversals, key reversal is much stronger than just simply an outside day out here. And so in this case here, with regard to the XLF, Robert, you're going to want to be paying close attention to this. Ideally, the XLF for you might come back and test the gap, which would be the high of July 15th, and that would be at about 25.25. Test that with light volume, and then go ahead and move on to that 1.618 level. Or maybe it just simply takes out the high of today. Taking out the high of today. Now, I'm assuming that the XLF closes one tick below the open, which was 25.60. If it closes and it's a green candle session today, it is no key reversal. And I don't know what's going to happen the next 2 hours and 2 minutes. But the guy who does, he's going to be up next, and that's David White. So he'll tell you exactly what the market is going to do by 4 p.m. because that is above my pay grade. But watch that 2104.75 in the S&P. And if the market is higher tomorrow, you heard it here from Stevie San. Have a great day, folks. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.